I think we've all had that creeping realization lately, you look at the money in your pocket or your bank account and you just know it's changing value every single day.
Yeah, it really is. And, well, it's not just your standard everyday
Yeah,
inflation.
right. Exactly. It's being driven by these massive, largely unseen geopolitical forces, which is exactly why we're doing this deep dive today. We want to welcome you, the listener, to a custom-tailored look at exactly what is happening to your money behind the scenes.
It's a huge topic, but it's incredibly urgent right now.
Totally. So, our source material for this and our whole mission today comes from an excerpt of this audiobook, The Leaking Pound by Gregory Scola. Specifically, we're looking at Chapter 7, Part 4.5. And the goal here is to extract this framework that Scola learned from the billionaire investor and historian Ray Dalio.
Right, Dalio's work on economic cycles, it's fascinating.
It really is. We are basically going to decode how 500 years of economic cycles are dictating our reality right now, like today. And more importantly, how you can actually protect your wealth when the rules of the game are basically breaking down.
Which they absolutely are. And I think, what's great about this approach is we get to skip the dry academic stuff. We aren't memorizing dates here.
Oh, thank goodness, no pop quizzes.
Exactly. Dalio treats history more like like a repeating movie. And recognizing the patterns in this movie is really the ultimate shortcut to making sense of the crazy daily news cycle. Because otherwise, it just feels like chaos.
It just feels like everything's on fire, yeah. But before we can really understand what's happening to our money today, we kind of need to know what drives the plot of this historical movie. So, okay, let's unpack this. The core thesis Dalio has is that history repeats in these identifiable cycles, right? And they're driven by five forces.
Right, five distinct forces. It's not just one thing going wrong, it's the intersection of them.
So the first one, force one, is money and debt. Borrowing, paying it back, defaulting. Force two is domestic politics, like the internal dynamics of a country when wealth and values start to violently diverge.
Which we are definitely seeing a lot of right now.
Yeah, no kidding. Then force three is the global order. Who makes the rules internationally? And crucially, what happens when those rules break down? Force four is nature pandemics, climate events, droughts. And finally, force five is technology, world reshaping inventions like AI.
Yeah, and Dalio notes that the really scary part, or well, the important part to pay attention to, is that these five forces are converging right now in a way we haven't seen since like the 1930s or the 1970s.
Okay, I like to think about this like the gears of a massive clock. If you just have one gear turning on its own, say just a new technology, it's manageable. But when all five gears sync up and start grinding against each other, the whole machine just starts shaking.
That is a really great analogy, actually. Yeah, because they amplify each other. Right.
Right. So I want to zoom in on the biggest, most immediate gear that is turning right now, which is force one, money and debt. Because the source notes this is basically the most critical concept Dalio teaches.
It is. It's the foundational gear. And the core concept to grasp here is that, well, one man's debt is another man's asset.
Right, which sounds simple, but it has huge implications.
Exactly. Like when you take out a mortgage, that's your debt, obviously. But for the bank, it's an income-paying asset. It's on their balance sheet as a positive.
Right.
And it scales up. When governments issue bonds to borrow money, pension funds buy those bonds. They use them as these super safe stores of wealth to pay for people's retirements.
So they need the government to be in debt.
Exactly. And this creates a very intense natural tension in the system because interest rates can't be too high or it absolutely crushes the borrowers. They default. But the rates can't be too low either.
Because then it punishes the savers, right? The
Yeah.
pension funds aren't making enough yield to survive.
Precisely. And what happens is when rates stay low for too long, the debt outpaces the actual income being generated in the economy.
Yeah.
The whole system just becomes incredibly fragile.
Okay, but wait, I want to push back on this a little bit. If everyone is voluntarily entering into these agreements, the government gets the cash it needs, the lenders get the safe assets they want, why is it a trap? It sounds like everyone is getting what they signed up for.
It's a trap because of what happens when you finally reach the mathematical breaking point. When the debt gets so big that the economy can't service it anymore, governments are basically forced into an impossible choice.
Right, the two choices.
Yeah. Choice one is you just let the crisis happen. You let people default. You endure brutal austerity, massive unemployment, a deep recession. You just let the fire burn the dead wood.
Which no politician wants to do on their watch.
Exactly. It's political suicide. So they look at choice two, which is to just print money,
Bail everyone out.
bail everyone out. It's super easy in the short term. Nobody defaults. But the hidden cost is that it rapidly devalues the currency itself.
Wow, okay. And the text points out that historically, especially since 1971 when Nixon completely broke the US dollar's link to gold, governments literally always choose choice two.
Always. Every single time there's a crisis, they print.
And that just gradually erodes our purchasing power. It kills confidence in fiat currency. Which brings me to this point, and here's where it gets really interesting. Because governments keep choosing to print money, there is this massive, quiet shift happening on the global stage right now. Because that trust is just evaporating.
Oh, the reserve shift. Yeah, this is huge.
It's mind-blowing. The stat from the text is that physical gold, is now the second largest reserve currency in the entire world. It's only behind the US dollar.
Beating out the euro, the yen, the pound, all of them.
Yeah. In 2026, central bank gold reserves hit nearly $4 trillion. They actually exceeded U.S. Treasury holdings for the first time since 1996. Like, the people printing the money are trading it for gold.
And what's fascinating here is that, central banks, they don't act on emotion. They aren't doom scrolling on social media and panic buying.
Right, they have armies of analysts.
Exactly. They are playing a very long game. They are actively seeking out stores of wealth that literally cannot be printed because they know the fiat system is trapped in that cycle of devaluation we just talked about.
Because gold has zero counterparty risk. It's nobody else's liability.
Precisely. And this loss of financial trust, it perfectly mirrors the loss of geopolitical trust. This brings in force 3, the global order. Dalio states very bluntly that the post-World War II, U.S.-led rules-based global order is, in his words, already gone.
Gone. Past tense.
Past tense, yeah. We are now officially in what he calls a law of the jungle phase.
Which sounds terrifying, but what does that actually mean for the global economy?
It means power trumps rules. When the rules break down, countries start using whatever leverage they have. So we see aggressive sanctions, we see sovereign asset freezes, where one country just seizes another country's foreign reserves.
Wow.
Yeah, we see capital wars. And this leads directly to technological decoupling. Countries realize they can't trust the global supply chain, so they start aggressively walling off their tech and building redundant infrastructure.
Which is incredibly expensive and inflationary. So, okay, the global order is fragmenting. Fiat money is basically programmed to lose value over time. So what does this all mean for you, the listener? Like, what about your actual monthly investments?
Well, if we connect this to the bigger picture, it means the old way of doing things is dangerously outdated. Scola explicitly contrasts old thinking with what we can call Dalio's perspective.
Right, so let's run through those. Old thinking says the classic 60-40 portfolio, 60% stocks, 40% bonds, always works. It's the gold standard of diversification.
But Dalio's perspective is that that assumption is breaking down. Because in an era of high inflation and debt monetization, stocks and bonds can actually crash at the exact same time. The shock absorber fails.
Yikes. Okay, old thinking. Cash is safe. If the market is volatile, just hold cash.
Dalio says cash is guaranteed to lose value when governments choose to print their way out of debt. It's a slow default on your purchasing power.
Old thinking. U.S. debt is totally risk-free.
Dalio argues it's a massive supply and demand issue now. If central banks are buying gold instead of treasuries and the government is issuing record amounts of debt.
Who's buying it?
Exactly. It's no longer a risk-free proposition.
Okay, old thinking. Diversification just means holding different kinds of stocks and bonds.
And Dalio's perspective is that real diversification requires fundamentally different types of assets, things that react completely differently to inflation or geopolitical shocks.
And finally, old thinking. Gold is just a relic. It's a shiny rock that doesn't yield anything.
But Dalio and the central banks view gold as a highly legitimate Tier 1 reserve currency.
Which brings us to Scola's practical application of this. He doesn't just talk about the theory, he actually maps out these specific portfolio allocations, which he calls pies.
Ray, he builds these structural layers.
Yeah, so he has Pie 1, which is just global equities capturing human innovation and growth, but then he layers in Pie 5, which is a dedicated gold allocation. Pie 7 is specifically for inflation-linked bonds to protect against that negative yield trap, and Pie 9 is targeted at geopolitics and resources like raw commodities.
And building this kind of portfolio, it isn't pessimism. That's a really important distinction.
Yeah.
It's just prudence.
Right. You aren't betting on the end of the world.
Exactly.
Yeah.
You don't have to predict the future. You don't have to know if next year brings runaway inflation or a deflationary crash. You just have to build something resilient enough to survive multiple possibilities. And you do that by utilizing hard assets and true international diversification.
I love that. Optimizing for resilience instead of just blindly chasing yield in a broken system. But, okay, to stay resilient, you really have to stay aware of what's happening. And Schola provides this incredibly specific, highly practical exercise to help you process the daily news, because otherwise the news is just overwhelming.
Oh, completely. It's paralyzing.
So he calls this the Dalio lens exercise. And the idea is you take 5 minutes, maybe when you're having your morning coffee, and you look at today's news specifically through those five forces we talked about earlier.
It's essentially a filter for the noise.
Exactly. So you look for force one, money and debt. Are interest rates moving? What are the central banks saying? Force two, domestic politics. Are we seeing extreme polarization or wealth gaps widening?
Which is almost every day, yeah.
Right. Then force three, global order. Are there new trade disputes? Shifting alliances. Force four, nature. Are there major climate events disrupting supply chains? And force five, technology. What are the industry reshaping breakthroughs happening today?
And the exercise is to literally write down one current example for each of those forces.
Right. And then once you have them, you ask yourself this one synthesis question. How might this combination of events affect the value of my money over the next 5 to 10 years?
This raises such an important question about how we actually consume information, because human nature is to react emotionally to a headline.
Yeah, we see a scary headline and we panic.
But this exercise, it forces you to step back and see the whole movie, right?
Yeah.
Instead of just staring at a single terrifying frame of the daily news cycle, you see the mechanics at work.
It totally shifts your perspective from being a passive victim of the news to an active observer of the cycles. It's incredibly empowering. So just to sort of wrap up this deep dive, I think it's pretty clear that the ground really is shifting beneath us.
It absolutely is.
The cycles that Dalio identified, they are real, they are mechanical, and they are repeating right now. But the takeaway here isn't doom and gloom. Armed with the right framework, understanding the limits of fiat money, seeing the return to hard assets, recognizing the changing global order, you really don't need to be afraid. You just need to be prepared.
Preparedness completely neutralizes that fear. And, before we go, I want to leave the listener with one final concept to mull over, something that isn't on a brokerage statement.
Ooh, okay. Lay it on us.
Well, we've talked extensively today about protecting your financial assets, right? Using gold, international equities, commodities to survive these 500-year macro cycles. But what about your own human capital?
What do you mean by that?
If the law of the jungle is returning and these traditional legacy systems are fracturing, perhaps the ultimate hard asset, the one thing that cannot be printed, it cannot be sanctioned by a foreign government, and it can't be inflated away, is your own adaptability.
Oh, wow. That is a great point.
Yeah, it's your unique skill sets, your ability to solve complex problems in a highly fragmented world. When everything else is volatile, competence and adaptability are the highest premium assets on Earth.
I absolutely love that. The ultimate hedge against a crazy world is just making yourself structurally indispensable.
Wow.
Well, thank you so much for joining us on this deep dive into the leaking pound. We really appreciate you tuning in. Keep your Dalio lens handy the next time you're scrolling through the news, protect your assets, and keep compounding your own human capital. We'll catch you next time.